Welcome to another episode. My name is Jose Najarro, and today we're going to take a look at Carnival Cruise and do a quick update on them. So let's get started. All the information I have either comes from seekingalpha.com, Carnival's investors website, or Yahoo Finance. They have a lot of different sources there, so feel free to check any of these websites out. Before we begin, don't forget to hit that subscribe button. I'm also streaming on Twitch and Mixer Mondays and Wednesdays at 9 p.m. Eastern Time. And also don't forget to check out my previous videos on cruise lines where I did a look at the company's balance sheet. So you guys want to take a look more in detail about each individual cruise lines, definitely check out that video after this one. And I'll post the link on the comments where I have the timestamp. I also did one on airlines very similar to this, so if you guys are enjoying these, definitely check out the airlines video, so check that one out as well. The links will be on the comments. All right, so now let's take a look at this company's stock return. And things don't look pretty for this company right now. Today, April 1st, this company dropped 33%, and that's no joke. Get it? April Fools. All right. Well, anyways, it dropped 33%. It started the day somewhere above $13 and it ended at $8.80. After hours, this company is up 5%. Might be just a small bounce back after that huge hit, but there was some good news that came out for the company. And one thing we're gonna see in this video is at these prices, I think I might be thinking about nibbling a little bit, but I still haven't given it a full. I still don't have a full answer for myself. But let's take a look at year to date. This company was sitting in January was sitting at around $51, and at its current price right now, it dropped about over 80%. It lost over 80% in a matter of 2-3 months, which I think it's crazy for these companies. But one thing we do know is these companies, if you guys checked out my previous video, I talked about the balance sheets, and most cruise companies actually had balance sheets that I did not like. I kind of like the airlines balance sheets a bit more than the cruise line companies. So next, let's take a look at revenue. So here I've collected revenue from 2019 for this company. It was $20.82 billion. And estimates by analysis for 2020, and I got this from seekingalpha.com. I like using them because they constantly update with their analysts constantly update there, and we get to see new revenues. And at this moment of April 1st, this company is expected to make $16.84 billion. And to my surprise, that was actually a little bit higher than I thought. It's still about a 20% decrease compared to 2019. But I did think it would be a lot bigger. But one thing is, quarter one just passed and it did give some strong revenues, just because the coronavirus did not affect until the end of that quarter. And I'm guessing they're expecting quarter two to be a wash. Quarter three, slow returns. And quarter four, they're hoping things to go back to normal. Earnings per share for 2019 was $4.33. For 2020, this company is expected to lose $1.12, and that's definitely a scary thing. Imagine going from making $4.33 to making less than $1.12. That is insane, and I can see why these cruise companies have been taking a huge hit. All right, so now we're gonna take a look at this article from Market Watch, and it talks about how Carnival was trying to build its liquid, or how it's trying to build this liquid. First, it wanted to get $6 billion of cash, and it was going to do it in this way. First, it was going to do $1.25 billion of share sale, of equity sale. It was going to sell it at a roughly price of $8 per share, and that's one of the main reasons we saw that big drop in the stock price, right? If you're willing to buy it for $8 in equity sales, why should you be paying more? So that's one of the big reasons this company dropped. The next, it was expected to make $1.75 billion in senior notes that were convertible and due in 2023. So that would make up $3 billion, and the other $3 billion was supposed to come from a senior secured bond. And these were supposed to pay a great rate of 12.5%. When they started to offer this, investors actually were willing to there was a huge demand for this, that they were even willing to drop that 12.5% to 11.5%. So they saved a nice amount of money there. And they were also, instead of building $3 billion from senior bonds, they were able to build $4 billion from there alone. And because they ended up building extra from senior bonds, they ended up selling less shares. So instead of selling $1.25 billion worth of equity, they're only selling $500 million worth of equity. So investors were wanting to enter these great rates. Right now, there's no bonds offering 11.5% coupon. So we definitely saw a nice amount of bond investors come in here, and they saw it too. So they were able to reduce the yield, and they were also able to reduce the amount of equity they're going to share, which I think is both good news for the company, and they were still able to raise their capital cash that they wanted to. The second thing I want to talk about is this article comes from Seeking Alpha, and right here the only thing we need to know is Carnival stopped its dividends, and it also stopped its buyback, which I think is pretty smart on their part. One thing I did forget to mention from the previous article, it's actually not in this article, it's in another one. I think I closed it, but in another article, Carnival stated today or yesterday that it needs $1 billion per month to be able to maintain its fleet and be ready to come back at any times. I think that's a ridiculous amount of money that they're burning right there, $1 billion a month when they have no revenue. But with this $6 billion worth of liquid that they just grabbed, they're able to now survive 6 months without any form of revenue, which gives this company has just bought a whole new life for itself, and that's definitely a great thing for the company. All right, so now we're just going to take a quick look at their most recent earnings, which was March 19th of 2020. And we're just going to see some form of impact that this company is having through this whole virus, and what kind of knowledge or an information they've given to us. So the first, for the quarter one, in GAAP revenue, they lost $781 million of profit, which estimated a loss of $1.14. This actually includes a $932 million. And this was a mixture of goodwill and ship impartment charges. So, right, they have to go dock their ships, they have to do all this type of work and make sure their ships are safe, clean, and everything. So that ended up costing $932 million here. Once they have their ships there, they don't have to read cost. They put this recost. So that's why they ended up doing an adjusted earnings, not including this cost. They also talk about their impact of the virus. On the first quarter alone, this virus cost them about 23 cents per share. And they're counting on this because of all the canceled voyages and other voyages disruption. So customers calling for a refund, customers calling for, hey, I'm not going to go on this ship because of the virus. This is what they consider a true impact from the company, right? This is actual revenue coming from, where the other one was a one-time charge that they're not going to see. This is something that they're going to see again in quarter two, right? Most ships are not sailing right now. So quarter two, they're going to get more refunds. Quarter three, they might expect less refunds, but we're still going to see it. And that's why they still mention they mentioned that form of impact of COVID-19. Next, they just talk about how sales are going at the moment. They mentioned as of March 15, 2020, advanced bookings for the remainder of 2020 are meaningfully low, are lower than the prior year. And that's that prices are also much lower. So you can see that right now, no one is out there buying any tickets for the remaining year of 2020. I wonder if 2021 is showing any better results, but at the moment 2020 does not look for a good time for the cruise line industry. So remember, as of February 29, 2020, this company has a total of $11.7 billion of liquidity cash. So now if we add that $6 billion that it just offered through senior bonds, to convertible notes, and through equity share, this company has about $17 billion worth of equity. Actually, more like 18, because that's 11.7. So it has about $18 billion full of of liquid cash able to produce. So in theory, this company is actually able to survive 18 months with the amount of cash it has. One thing that I am a little confused about is if this company had 11.7 of liquid available to it, why did it have to go and get $6 billion more? If they're only burning $1 billion a month, this could have lasted them a full year. All right, so the final thing we're gonna take a look at is here in Seeking Alpha. I like to use Seeking Alpha for looking at their annual EPS estimates. So I remember, like I mentioned, 2020 is going to be a very scary year. This company is expected to lose $1.12 for the full year of 2020. But 2021 is expected to do a lot better and is expected to make $2.87. $2.87 would give this company a forward PE ratio of $4.59. A forward PE ratio of $4.59 does not seem like a bad thing to me. I mean, let's cut that. Let's say it's even worse than that, and let's cut that earnings per share estimates by 2. So let's say they only make $1.40 for the full year of 2021. If this thing is not gone by 2021, we have bigger problems at hand. But even at 2021, if we cut that estimate by half, this company has a forward PE ratio of 9. And 9, I think, is still pretty low, especially if once things keep up, they're gonna grow. They're gonna start growing at a faster pace. So for me, this is actually the first time when I'm actually thinking about entering this position. I think this is very cheap right now, but I still have not made the decision. I'll have to wake up tomorrow morning and see how I'm gonna play this. And if I do enter, it'll definitely be a small position side. But I definitely wanted to mention that. So let me know what you guys are actually doing with this company right now. Again, don't forget to subscribe, guys. I appreciate you guys for watching this content. I enjoy doing this every single day. So make sure to subscribe and also check out those other videos on the links that I posted if you want to take a look at the airline videos or if you want to take a look at the previous cruise line video. So take care, guys. Have a good night and see you next time.